Welcome to Module 2 of our Regulation CC training. In this module, we'll break down the key terms and definitions that serve as a foundation for understanding funds availability. Whether you're on the front lines opening accounts or handling deposits, these terms shape how we communicate and comply with federal regulations. Let's dive in. A check is a written, dated, and signed instrument that directs a bank to pay a specific sum of money to the bearer. Under Regulation CC, this includes personal checks, business checks, official checks, Treasury checks, certified checks, and money orders when drawn on a bank. Keep in mind, while checks are becoming less common with electronic transfers, they're still a critical part of Regulation CC's focus. Understanding timing is essential under Regulation CC. Let's define two key terms. A business day is any calendar day other than Saturday, Sunday, or federal holidays. A banking day is a business day on which a bank is open for substantially all of its banking activities like accepting deposits and cashing checks. For example, if your branch is open Monday through Friday but closed on federal holidays, then those 5 days count as both business and banking days. Funds availability deadlines are based on these definitions, so the effect when deposited funds must be made. Historically, Regulation CC distinguished between local and non-local checks based on where the check was drawn and where it was deposited. This mattered because checks drawn on out-of-area banks could take longer to clear. But here's the key update. This distinction is no longer relevant post-Check 21. Since Check 21 allows for electronic clearing of checks, nearly all checks are now processed the same way, regardless of geography. We cover this to give context, but you no longer need to differentiate between local and unlocked checks when applying holds. Now, let's discuss the availability schedule, essentially the rulebook for when deposited funds must be made available. Here's a simplified version of what Regulation CC requires. Next day availability. That's cash deposits, electronic direct deposits, U.S. Treasury checks, honest checks, meaning drawn on the same institution, certain government, cashiers, or certified checks when deposited in person. Second business day availability. Most other checks like standard personal or business checks. Extended holds. Under certain exceptions, funds may be held beyond 2 business days. We'll cover those shortly. Understanding this schedule helps prevent confusion and ensures accurate communication with members or customers. When it comes to holds, new accounts are treated differently. A new account is defined under Regulation CC as one that has been open for 30 calendar days or less, but it's more than just the account. Regulation CC defines this based on the customer or membership relationship. If a person has never had a transaction account at your institution in the last 30 days, then it's considered a new account, even if they had a loan or other product. Why does this matter? Because for new accounts, the usual availability rules don't apply. Financial institutions have greater discretion to place longer holds on deposits made into new accounts, especially checks. This is a key area where frontline staff must understand how to apply holds properly. Let's now define 2 critical banking rules in any check transaction. The depository bank is a bank that receives the check deposit from the customer or member. The paying bank is the bank that the check is drawn on, the one that will ultimately pay out the funds. For example, if a member deposits a Bank of America check at your credit union, your institution is the depository bank, and the Bank of America is the paying bank. Regulation CC primarily applies to the depository bank. That's because the depository bank controls how and when the funds are released to the customer. These 3 hold types are essential tools under Regulation CC. We have next day availability. This rule requires institutions to make certain deposits available by the next business day. It applies to cash, electronic deposits, U.S. Treasury checks, honest checks, certain certified cashiers or government checks deposited in person. As of July 1st, 2025, the first $275 of any check deposit that qualifies must be made available by the next business day. Safeguard exceptions, also called exception holds. These are situations where a financial institution can legally delay availability beyond standard schedules due to risk factors. These include large deposits, when the total deposit of the checks exceeds $6,725 in one business day. The first $275 must still be available next business day, but the rest may be held. Redeposited checks, when a previously returned check is resubmitted. Repeated overdrafts, if the account has been overdrawn repeatedly in the past 6 months. Reasonable cause to doubt collectability, if a check appears altered, suspicious, or fraudulent. Emergency conditions, this includes natural disasters, communication outages, or system failures. When using a safeguard exception, you must provide a written hold notice to the member. Clearly state the reason for the hold. Disclose the date when the funds will be available. Case-by-case holds. These are discretionary holds placed by the institution even when an exception doesn't apply. Institutions can delay availability up to 2 additional business days beyond the standard hold period, but you must disclose your case-by-case hold policy to the account disclosures, notify the customer at the time of deposit, provide a written hold notice that includes the amount held when the funds will be available. Tellers must follow strict guidelines for issuing these notices. Incorrect or missing hold notices can result in regulatory violations. Let's review the key takeaways. A check is any negotiable instrument drawn on a bank. Businesses and banking days determine funds availability timelines. The local versus non-local check distinction no longer applies to post-Check 21. The availability schedule dictates when deposited funds must be released. A new account is one open for 30 days or less, allowing more flexible hold rules. Know the difference between a depository bank and a paying bank. Understand when to apply next day availability safeguard exceptions or case-by-case holds and when written notices are required. As of July 1st, 2025, the next day threshold is $275 and the large deposited threshold is $6,725. Disclaimer: this training is for educational purposes only and does not constitute legal or compliance advice. Always refer to your institution's policies and consult with your compliance department for guidance on Regulation CC. Thank you for watching.